The powerful and insightful Adonis Currency Strength Indicator, which is readily offered for various trading platforms on the comprehensive TradingFinder website, provides valuable market analysis. Traders can download the indicator file from this section, and they can also read this page to learn about how the indicator works and its functionality. From the Navigator section, we select the indicator file and run the indicator by dragging the file onto the chart. Once the indicator is loaded onto the chart, a window appears at the bottom of the chart. Traders can use this window and the lines displayed in this section to perform more specialized analyses on currency pairs. The Advanced Currency Strength Indicator is a special and specialized tool that displays the positive or negative correlation between different Forex currency pairs within a single window. This indicator, by simultaneously analyzing the strength and relative weakness of currencies and identifying correlation patterns, creates conditions that allow us to detect trading opportunities based on this data. In the Settings section, under Inputs, there are options available to us. In the first input, we can set the RSI calculation period, which can be used to calculate momentum or to detect the movement acceleration of currency pairs. The next input relates to displaying all the currency pairs that we activate in this section, and if this option is set to false, the indicator will only display the symbol that is currently active for us. In the next input, we can specify the maximum number of candles that will be calculated and displayed on the chart, which is set to 500 candles by default. In the next input, we can also specify the time interval for calculations, which is set to a 5-second interval by default. This means that every 5 seconds, the new Forex rates are displayed in the window and the window is updated. In the next section, we can also enable or disable the display status of each currency here so that it appears in the window. In the following section, we can also choose the color of each currency and each symbol as we like. In the last two input fields, we can also select the display size of the non-currency pair lines that we are hovering over, which by default is set to 1. This means that the other symbols we activate here will be displayed at size 1. And in the very last input field, we have the ability to precisely set the display size for all of the various currency pairs on which we have successfully applied this particular indicator. By default, this specific setting is currently set to a value of 3. Right now, we are actively observing the GBP-USD currency pair, and the indicator is clearly showing us the current supply of the Great British Pound and the corresponding supply of the United States dollar right here at a display size of 3. The way this indicator works and how to use it is based on analyzing currencies according to the selected currency pair. Here, I am activating the euro in this section. USD is activated, GBP is activated, but I am deactivating JPY here. Within the chart section, we can also effectively start analyzing and thoroughly reviewing the available data. For example, when the GBP line, which is clearly our blue line, crosses significantly above the USD line, which is the red line, it distinctly indicates a noticeable increase in the relative strength of the GBP compared to the USD. After that, we can then observe that the price has indeed moved upward. Or in this section, we can see that the USD line has crossed above the GBP line, which indicates an increase in the relative strength of the USD compared to the GBP. Here we can also see that the strength of the GBP has decreased in comparison. At this point, the GBP supply has moved downward, meaning the strength of the GBP supply has decreased, and after that, alongside it, the USD supply has increased, which has led to increased downward momentum in the price in this section. In another dedicated section, we can thoroughly analyze and carefully review various other currencies and financial symbols in direct relation to our currently selected currency pair, Alders-Dollars-Rasid. For example, here the supply of the euro and the supply of the GBP have a relatively high correlation, and if either the GBP or the euro is bullish, the opposing currency will also be bullish. But at this point, we see that the supply of the euro has decreased and moved downward, while the supply of the GBP has moved upward, which indicates a divergence between the movements of the GBP and euro relative to each other. In the next chart, we can also observe this difference in price movement. Here, the supply of GBP-USD is bullish and the strength of the GBP has increased, but in the case of the euro, we see that this has not happened and the price has started a strong downward trend here, which indicates a decrease in the supply strength of the euro in its economy. Well, friends, we've reached the end of this indicator tutorial. We would be absolutely delighted if you could kindly share your valuable comments and constructive suggestions with us in the dedicated comments section below. Thanks.